I'm here with Donald Drapkin of Casablanca Capital at the Deal Economy 2012. Donald, thanks for joining us. So you just got off of a panel discussion. What were some of the most significant points that were raised on the panel?
I think the most significant point from most of the people on the panel was that there seems to be a consensus that economically, in the United States especially, that the time is right for increased activity both in activist investing, strategic investing, divestitures, refinancing. U.S. companies are chock full of money. They're looking for acquisitions. The private equity firms are looking for acquisitions. And M&A activity should spike up over the next 12 to 24 months. The countervailing factor to all of that is that we're all extraordinarily nervous about what's going on in Europe and India and Pakistan and China, and because we really don't understand it and they don't play by our rules, and until we see markets calm down a little bit and people can feel safe investing, I think that will put some kind of a damper on what should be a more robust M&A market.
So you seem to have, kind of an economic outlook that's not necessarily completely positive, but not necessarily totally negative either. Are your peers sharing that sentiment?
I think everybody has sort of the same view. I mean, look, there are problems in the United States. We got to fix housing. People don't have jobs. The administration isn't doing very much about any of it. But when you get right down to it, there are some good fundamental U.S. businesses that, if given the opportunity, will perform well. Plus, balance sheets are healthier than they've been in decades. And so the United States is in a position to capitalize on the worldwide economy if things stabilize. There are 300 million new Chinese middle-class people hungering for goods, mostly U.S. Same thing in India, same thing in Russia. So the markets are growing dramatically. The question is how they're going to get serviced and whether or not the banks are going to get in the way.